there's still a bear market going on in venture capital, right? Like people talked about the short bear market. There's been 2 bear markets. I heard you guys talk about that on Compound. You know where there's a bear market for the last 2 years? Venture capital. When we look back at venture capital outside maybe crypto, a couple AI funds, you were going to see some of the worst returns over 10-year periods. We're not talking about an 8-month bear market. We're talking about the bear market that everybody used to see in the stock market has moved into the venture market because of the crowding. You know, I'm listening to more and more podcasts from friends who are doing podcasts who are smart people, and that's why we started this show. I start melding together this story because all I hear about stock people saying is, wow, that was a short bear market. Well, it's a short bear market because venture capitalists continue to do stupid things because they don't even understand the moats that Apple, Facebook, Google have because they control the pipes. So, you know, we're missing the bear market. Michael's missing the bear market. Michael's investors are missing the bear market unless they're exposed to late stage venture capital growth, which is probably in one of its most epic bear markets, kind of like they're in their 2000 to 2005 moment or 2000 to 2002 moment.
How would you point if there were a VIX to track the private side on that? You know, what would you say the VIX is right now on that?
It would be at STUPID, meaning it won't go down until people stop being stupid. It's a really hidden bear market that I'm watching every day because I talk to founders who can't raise money for good ideas that are actually 6 years ago would have been easily raised to Series A, but because no one wants to look at it because they're dealing with headaches from bad investments they made 6 years ago. The reason the public market is still the most interesting, fun market at times, and people got sidetracked with VC investing, is that you can at least change your mind. Okay, there is not enough weight put on the fact that you can talk about Starbucks and change your mind. You can't talk about your note-taking AI app and then see Google do it, and you've got $10 million in the bank at your crappy AI product that just became a commodity. And so I think what's really hidden in that VIX is the pain that's still not even like surfacing in these thousands of kids that raise $1 to $100 million that are walking out of business. They're literally walking around out of business looking for jobs.
How can we be late in like a cycle, in like a bull market cycle for equities and risk assets in general, if it's still so shitty in VC? Like that, like VC's got to get better, I feel like, before the end of a major cycle, no?
I feel like there's a gigantic disconnect, and Howard's been doing this longer than I have, but I don't see what one has to do with the other. Like, that might sound dumb. Wait, how does private equity and public equity not? It got so disconnected that the rolling bear market, and I had a company that's, I wouldn't say they're firing on all cylinders, but they're doing pretty damn well. They just did a down round, and they're doing well. And if this was 2 years ago, they would have done a stupid up round. So I think the disconnect, especially in growth equity, got so bad. And I think a lot of people are completely, if you're not invested there, how would you know how bad it is? But it's bad.
This is Trends with Friends, so I diverge. You got to understand, when I started doing this, I would go on podcasts or whatever shows where I would, on my blog, talk about how connected the markets were. So there was a period when AngelList started where it was a euphoric new signal of connection, meaning you could go on AngelList and see 50 CRMs and see, oh my God, there's 50 CRMs being funded. So there was signal there saying, okay, people are coming for Salesforce. Now, you could say that's stupid or smart, but at least there was signal. So the markets had not been connected yet. And with the beginning of AngelList, which I used to write about in 2011, it was a euphoric moment for idiots like me because I had a data set that connected private markets to public markets. What happened by 2021, everybody was looking at the data set, which can be good or bad, as we all know from looking at charts, but they were looking at it in the completely wrong way. They thought they had signal that they didn't have. And people were flocking to sectors that weren't ready to be disrupted or didn't need to be disrupted. And so now you have this massive bear market. No one asks these questions because no one gets paid to tell you the truth. There's no real profits in telling the truth. And so what happened in VC land, everybody just made up their own truth. Their new truth in VC land is only Trump can save Bitcoin and Silicon Valley. This is like complete anti-ethical behavior by venture capitalists. They're just supposed to be, may the best company win. Now they all of a sudden need a president to align with them so that they can have an advantage. Like, the venture market is so fucked up. And again, I hope I'm wrong, because I don't care. It's my business. But if you're not with the right people, you are so much better off being in the public markets right now. And so, yes, JC, that's why I continue to talk about the public markets more than the venture market.
No, I'm fascinated by the fact that the two of you, two guys who I trust and respect, think that the disconnect can continue and persist. I'm pretty fascinated. I find that really interesting.
Here's why, JC. In the private markets, price does not move as fast as in the public market. The VIX just went from 10 to 60. If that doesn't make you reprice things, okay, there's no VIX in the private market. Bad behavior can continue. And I can tell you that private late-stage growth technology took another tick down en masse, because everybody would rather be in public markets right now.